Hi students, good evening again. Today the topic we are discussing is related to IAS number 40, that is related to investment property. As we know that in the previous lectures, in the previous videos, we are discussing about the different accounting standards as per the International Accounting Standard or the Financial Reporting Standard. So today we are discussing the IAS number 40, that is related to investment property. So the first application date for that was obviously 1st January 2005. Now, as it's known by its name, it is related to property, and in the property what we include the land and also include the building. So it may be a land or it may be a building, or it can be both. So it can be for the land, it is applicable on the building, or it may be for the both. Now, we have to consider, we have to understand that what is the purpose, why we are held the land for earning the rentals or for the capital appreciation or for the both. Means the company or the business, they have purchasing the land, they have held the land for what? The first thing is what? The purpose is to earn the rental. Means any land, any building which they have, and the purpose is what? They will get the rental from that. And the second purpose is what? That the capital appreciation. Means after some time, maybe after 1 year, 2 year, 5 year, there is a possibility that now the prices are less, but after that the price of the land or the price of the building will increase and they will get some capital gain on that. So they may be purchasing this property for what purpose? That either they will get the rental from that now, or in the future they will sell it and they will have some capital appreciation, or the reason may be a rental purpose, or it may be capital appreciation, or it may be both. Means sometime they are getting the rental from that, and also after some time if they see that there is a proper capital appreciation is there, they may sell it. So all will come under the investment property. But very important thing here, that only related to the property, means only related to the land or building or anything which is related to the land or building. Now, it is not applicable for what? When you are having some property which is used for the production purpose, like some factory is there, or for the supplying of the goods, or for the supplying of some services. So any property which they have, any investment they have in the land or the building where there is some production process going on, they are selling the goods or the selling the services, so it will not be applicable IAS number 40. And again, if they have some property which is they are using for the administrative purposes, again that property will not be under the investment property. So this is not investment property, this is not investment property. And even if they have some property which is held for sale in the ordinary course of business, again that will not be applicable according to the IAS number 40. So the purpose, the sole purpose should be either the rent or the capital appreciation or both. So here obviously these are for the IAS number 16, and then there may be other standards that are applicable. And the very important thing that we have to consider when we have to recognize this property as an investment property, there are two basic conditions are there. First condition, the future economic benefits. Means the business is expecting that from this property, this IAS number 40 property or investment property, what we will get some future economic benefit. It is expected. Obviously there is no surety about that, but it is expected that they will get some economic benefit in the form of what? In the form of the rent or in the form of the capital appreciation. And the second condition, the cost of that property, a land or the building, is measurable. So investment property, first of all, it has some economic future benefit which are expected, and the second thing, the cost is measurable. Now, the initial investment, first of all, when we have to recognize that one, so we have to measure it. Initial investment is based on what? On the cost of the purchase. For example, you are purchasing the land for 50,000, so that amount will be the cost of purchase plus any related costs. For example, the registration fees is there, some commission is there, some transfer fees are there. So all those costs will be added at the time of the initial investment in when we are writing it as a investment property. Now, what should not be included? We are including the cost of the purchase, we are including the transfer cost, we are including any commission or any registration fee we are paying to the government, but what we are not including is any startup cost. Any startup cost will not be considered because it's not related to the business, it is not related to the normal production or the supply of the services or administrative purpose. So these things should not be included. Again, the operating cost, like a day-to-day operating expenses for the properties are there, it should not be included. And again, any abnormal waste in the property should not be included. So these three things should not be included, and obviously the cost of the purchase and related cost should be included. Now, subsequently, we have initially recognized that asset as an investment property, but later on, how we will subsequently measure it. We have two methods, cost method and the fair value method. The cost method means what? That as we are doing the cost method in the IAS number 16, the same cost method will be used, means that asset, that land or that property or that building will be depreciated just like IAS number 16, but not under the IAS 16, it will be shown separately in the investment property IAS number 40. Now, the first method is the cost method or the cost model, and the second model is the fair value. Fair value simply means the market value at the end of the year. Like, for example, you have purchased that building or the land 1 year before, now financial year closing. Now we have to see that what is the current market value. Obviously, there may be some gain or there may be some loss. So that gain or loss should be recognized in the profit and loss or in the income statement, but there will be no depreciation because we are not using the cost method, so there will be no depreciation. Depreciation will be used only when you are using the cost method. And very important thing, only one model. Like, for example, if they have chosen that, for example, they are using the cost method, so they have to apply for all the investment property. And if they have chosen, for example, the fair value method, so they will use for all the investment property. They cannot say that for some of the assets, investment property, they can use the cost method, and for some of the property, they can use the fair value. So it should be used for all the property. Then again, there is a possibility of the transfer. Transfer means sometimes they are transferring the asset, like a land and building, to or from, means they may be asset they are transferring to the investment property, or they may be transferring from the investment property. So what they have to do, they have to write it according to IAS number 14. So they have to see that either they are transferring it or they are de-recognizing it. So again, the de-recognizing means what? There's a disposal of that asset. They may be disposing of the land, or they may be disposing of the building, or there's a possibility that there is no more economic benefits related to that asset. So again, what they have to do, they have to de-recognize it. Obviously, they have to sell it, or they may have to transfer it, or they may have to dispose it off. So in all that condition, it will not be shown in the investment property. In the next lectures related to that, obviously we will discuss in detail that what are the different fair value calculations are there, how it is done, what are the values that should be included, how it is calculated, and again the most important thing, when we have to write the investment property, obviously there are some disclosure requirements in the statement of financial position or in the statement of comprehensive income. So we have to write all the disclosure requirements. So this will discuss in the next lectures. I hope you have understood that, but still, if you have any doubt, if you have any question, you can ask me in the next lecture. Thank you very much.